Hi everybody, it's Tuesday, October 7th, 2025. We'll start with our headline. Engulfing bearish candle confirms potential top. We had a classic bearish engulfing candle today to the downside, notably after a small green candle, which is the ideal situation as far as a candlestick pattern goes for predicting downside. This is 2 days after a topping tail candle, which is also bearish, and which never had a close above the top of the tail. All of this at the all-time highs is so far confirming a potential top in the S&P 500. So Black Wednesday, here we come. Moving on to our community topics. What moves, if any, did you make today? Comment below. Robschild buys some puts, calls on the VIX, the VXX for October 31st, specifically at 39. I actually added to this position. I didn't mention it on the show because this isn't the main thing that I do. I like to go in and out a little bit with, a little bit of money when all the stars seem to be lining up, but it's not a main part of the way that I am an investor, and so that's why I avoid talking about this kind of stuff for the most part. But I'm hearing way too many traders getting a little too excited, if anything, over the VIX being so low for so long. Plus, take a look at the put to call ratio. I was going to bring this up at the end of the show, but might as well do it now. Nobody has puts. This is pretty low, especially for being at an all-time high, especially for October, especially knowing that the jobs market is like, yeah, it's probably the non-farm payrolls report is going to be negative sooner than later. It's pretty darn clear in everybody's crystal ball at this point. And while at the same time, not many people have puts, people have more calls than puts right now. Seemed like an opportune time. Traders better than me are expecting the VXX to get to 40 by the end of the month, so that's why I chose this date and this strike price here. I also got into BITI, a short on Bitcoin. If you've been following the show, you know this orange line represents the 2021 high connecting to the 2017 high, and going through here. I got some soon as at that orange line there, and I got some in pre-market today. I quadrupled the position today. Yeah, we didn't get exactly to the height of this yellow trend line here, but we got close enough. So I was sniffing out bearishness, and so far the short is playing out to my favor. Bitcoin dropped by 2% as of this recording. It was down further earlier. So my first cost basis was 1763, and then I multiplied it by 4 at 1674. What did you do today, if anything? Comment below. I'm curious. Coming up, economic data still in limbo, guys. As long as the federal government is essentially shut down, we don't get to know what the initial continued jobless claims is. It's crazy, right? I mean, this is going to drive me nuts. Week after week, I count on this so much every Thursday, the initial and continued claims. This is the ultimate bellwether if the jobs market is actually cracking apart or not. We need this data very badly, so I hope that things get resolved sooner than later. Personally, we'll call it out of morbid curiosity, no matter which way it goes at this point, because if initial claims are going way down, then those of us expecting volatility and bearishness are, not going to get that, even though that would be good news. And equally the opposite. If initial claims are spiking to the upside, it's horrible for the economy and good for the bears. But it's all irrelevant. The main thing is that we don't have the data. It doesn't exist right now. Out in the public anyway. And then same with the employment report last Friday, employment report. We need these numbers so bad, more than ever, in order for us to decide as investors, as market participants, what we can even contemplate it may be going on with the economy and the value of securities. We need this data. I hope it comes out sooner than later. I digress. Also look out for those tariff updates. Thank you for watching, liking, subscribing, commenting, and supporting Robschild. No changes to the crystal ball readings. See my website in the description to read through my daily reminders, macro views, portfolio explained, and stock research center. Back to the charts. SPX, the S&P 500, not just engulfing Monday's candle, but engulfing also last Friday and Thursday's candle, although it's not really a part of the main thing is the engulfing of Monday, and that Monday was a small green candle. This is classic engulfing bearish reversal signal at the top again, right after a topping tail. All signs point to the stock market going down from here. And if we do, I'm looking to see if we break down below this lower trend line that we have been sort of bumping along on since May of 2025 over and over again. Will we crack below it and confirm to the downside? If so, many chartists are expecting a wild ride to the downside. The one thing that may get the stock market going back up, believe it or not, I'm going to say is Bitcoin, only because it was actually on Monday's candle. We did reach an all-time high on Monday. And in the S&P 500 didn't quite make it there. I don't know how much to count. The Bitcoin is maybe suggesting that the stock market has one last pump to the upside, especially considering Bitcoin's a 24-hour market. If the S&P 500 was open during all of this time, who knows? Anyhow, moving on to the 10-year Treasury note yield. Notably, we tried to get above this purple trend line that we've been bumping our heads on today. And I just noticed today for the first time that we do actually, believe it or not, this is going to be a little bit of pain for the bond bulls like myself. There is indeed an inverse head and shoulders on the 10-year Treasury note yield. It looks very solid, very formidable. If we get if we start getting higher above here, then yeah, if this plays out as an inverse head and shoulders, we could get as high as 4.42 on the 10-year Treasury note yield. But we shouldn't count our chickens before they hatch. You don't really want to pay attention to head and shoulders until it triggers, and we don't have it triggered yet. Another very notable thing I really wanted to bring up today about the 10-year Treasury note yield is that the 10-year Treasury note yield dropped today by 3 basis points. Also, by the way, engulfing the previous day to the downside. Now, when you have that correlating on the same day as a bearish day in the stock market, it means that bonds and stocks are acting to have a negative correlation. In other words, stocks going down and yields going down on the same day. If that continues, if this bearishness continues to the downside, the way the 10-year note yield acted today, going down as well, suggests that if the stock market goes down from here, it does appear to me that money will be going into treasuries, that this isn't one of those situations where yields are rising and that's one of the pressures that's pushing stocks down. That's not what we're seeing today. Things can certainly change and they are different on different time frames, but I think on a daily basis it's important to realize, yes, the stock market went down, and yes, yields went down today. Traders better than myself with more experience are looking at the VIX as potentially breaking out with all of their lines and charts, including Ron Walker. Many of you are probably familiar with his work. I want to add that, while we have this kind of scary looking topping formation in the S&P 500, the VIX is still not scared yet, only at 1723. We're not really in any kind of fear mode until we're at least above 20. I think we are headed there, along with lots of other chartists right now, but we will see. The reason I was able to find notice the inverse head and shoulders on the U.S. 10-year Treasury note yield was that we have the same thing going on actually in the dollar index, believe it or not. The dollar is dead, says gold and Ray Dalio pumping gold today for whatever reason. And yet we have a bullish formation looking, developing on the dollar, interestingly enough. And unlike the 10-year Treasury note yield inverse head and shoulders, we are ending with a green candle slamming into it. So the dollar inverse head and shoulders appears to have a little bit more chance of playing out to the upside than the 10-year Treasury note yield. Maybe I'm just being hopeful because of my positioning. Hope not. One thing that I'm doing psychologically for myself, I just ordered on Etsy a bracelet that says calculate greater than speculate. So I can always remind myself, all right, is this a speculation or is this a calculation? One thing that a lot of traders often remind me on their videos is the importance of stripping emotion out of the equation, getting rid of, am I just speculating here or am I, thinking here? Am I calculating? Am I looking at what's going on and calculating risk and reward, or am I just hoping? It's important to do, to play this game well and to stomach it. Moving on, I wanted to share with you today crude oil. I don't know where to draw this line anymore. I can't tell if this is looking like a blow-off bottom or if this is more like a bear flag. I mean, we're further than 50% down of the pole, so I think that we can still consider this a bear flag, but something to just keep a tight eye on. If oil were to continue higher and higher, the 10-year note yield will likely follow. The last chart of the day is just the advanced decline line confirming downside. So most of the stock market did participate in this sell-off in this red bearish engulfing reversal candle. This confirms downside and isn't just because a few mega caps went a little haywire. So Black Wednesday, here we come, and that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching and see you next time. Robschild.